Peter at Dakota Plains with your April 16th market update. We had a pretty rough trading session today. Looks like corn closed down 6, soybeans down 17, and winter wheat down 12. We did not have a crop progress report today. It sounds like there were some issues at the USDA office, so we will see that report tomorrow. The trade will certainly be anticipating that. The planters are rolling, and some favorable rains fell over the weekend, and that put pressure on the grains. The trade will be very sensitive to weather events in the coming weeks, and the question in everybody's mind is, will we really plant 95.9 million acres of corn like USDA has estimated? And the other big question is, will we get trendline yields? We here at Dakota Plains feel that we might see 1 million to 1.5 million acres of corn get switched to beans given the recent soybean rally. And trendline yields may not be a reality this year unless we get just perfect ideal conditions. And the reason we believe that is there's so many marginal acres that had to be put in corn production in order to get to that 95.9 million acre number that trendline yields will be very difficult to achieve. So we feel a more realistic number might be in the 155 range. Soybeans moved in sympathy with corn today. Nothing has fundamentally changed in that market, though. It's still a tight situation. Some analysts are suggesting that the Argentine crop may get a little bit smaller yet. So that would certainly be a bullish event for us. Winter wheat today was under pressure, similar reasons as the corn was. We got some good rains in the southern U.S. We did have some severe weather that may have done some crop damage, but it seems like the trade's not too concerned about that for the time being. New crop winter wheat values are certainly depressed right now, and that is actually putting pressure on new crop corn values as well, so that will be something to pay attention to as we go forward. The outside markets were mixed today. We did have a pretty good retail sales report. It looks like an increase of 0.8% in March. The analysts were looking for a 0.3% increase. So certainly a bullish report there, but that's where the good news ended. We did have a poor manufacturing report in the New York region. It looks like the analysts were looking for a reading of 18, and the report stated a reading of 6.56. The March reading was 20.21. So kind of disappointing, although there is some growth there. A reading over 0 indicates expansion, a reading less than 0 indicates contraction. So that region is growing just at a slower pace than what the analysts were thinking. The EU concerns are still there. The yield on 10-year Spanish bonds eclipsed the psychologically important 6% mark today, so people are really starting to grow increasingly concerned over the situation in Spain with their debt. The U.S. dollar actually surprisingly went down today. Would have thought that we would have seen a little bit of a flight to safe haven assets, but the dollar corrected itself down about 0.43%. So not enough to overcome the other bearish info in the grains today, however. So hopefully we have a little bit better trading session tomorrow, and I hope everybody has a good night. We'll talk to you later.